Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things markets, as always, is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things started today, we have a ton of reports. It's been a big week for the USDA. But before we get into that information, let's recap what happened this week in the markets.
Yeah, on the cattle side of the equation this week, live cash cattle were $1.50 higher. Those feeder cattle markets were mostly steady to $5 lower for the week. On the futures side, the October live cattle futures contract closed up about 40 cents, while the October feeder cattle futures contract closed down about $1.70. On the beef side, choice box beef prices were about $1 higher this week. While we look at the hog side of the equation, strong markets this week on hogs with cash barrel and gilts up $4.25 on the week. The October lean hog futures contract was also up strong, up $5.25 on the week. The pork cutout value gained $6.20. That now puts it almost $20 over where it was a year ago at this time. And strength in hams and bellies certainly led the way, but we had strength across the board this week in those pork cutout components.
It definitely was a nice surprise this week to see, especially the cash hogs take a big move up again. It's something that's definitely needed right now.
Yeah, for sure. And it's providing some opportunity for folks to look longer term at some risk management strategies, I would say, just given where we are. And again, I'm not calling for a top in the market unnecessarily, but a chance to lock in some profitability that maybe we would have struggled with a month or so ago.
Let's talk a little bit about slaughter as we take a look at those numbers. An increase on both the cattle and hog side on slaughter numbers this week.
Yeah, that's correct, Megan. 651,000 head of cattle estimated by USDA for this week. That's 0.9% above where we were last week. So, good news there. On the hog side, 2.627 million head slaughter for the week. That's almost 2% higher than where we were a week ago on the hog side. So both of those need to stay strong as we finish the year, but in the right direction for us.
I definitely, and we're going to talk a little bit more, especially on the hog side of things and in that slaughter situation as we get into the hogs and pigs report. But do we get nervous as we get into this last quarter of the year, knowing that shackle space is always pressured anyway, and we still are working through this backlog of hogs in the production system?
Absolutely. I think you can look at where we're headed this last quarter, and we've got to get some kill weeks of 2.75 or so to kind of feel like we're breaking even and not backing hogs up. So we're certainly not there with these weekly slaughter numbers that we're talking about now, but we traditionally grow in this last quarter on the slaughter side. So I always go nip and tuck, but it looks like maybe we're going to sneak through given what we have coming, but let's sure not hope we get any slowdowns at this point.
And that's definitely something that we'll continue to keep an eye on as we move through the last few months of the year. All right, let's get into these USDA reports. Let's start with cold storage numbers and what we have there.
Yeah, so by and large, we got good numbers out of cold storage. If you look at cold storage stocks of red meat and poultry at the end of August, 2.34 billion pounds. That's actually 7.4% lower than where we were a year ago in terms of those total meat supplies in storage. Pork kind of led the way, actually, which it's to me a little surprising just given how strong production has been running. We're down about 250 million pounds of pork ending stocks relative to year ago levels. Beef also down relative to a year ago, not nearly as much as we saw on the pork side, but by and large, it has to point to some fairly good demand, both domestically and internationally, I suppose, as we talk about a drawdown in stocks in the face of what's been growing production.
Which leads us to our livestock slaughter report, also out this week. And kind of an interesting take as you look at the numbers in comparison.
Yeah, that's right. We look at the beef side of the equation and you look at total cattle slaughter. It's and this is year to date, so through August of this year, we're down 4.3% in terms of cattle slaughter year to date. Yet we talk about dressed weights up 23 pounds or up nearly 3%. So that leaves us a net situation where beef production year to date is only down 1.3, as those heavier weights certainly mute the effects of what's been lower cattle slaughter. On the hog side of the equation, hog slaughter is now 2% above year ago levels when you look through August of this year relative to a year ago. And on top of that, we also have higher hog weights, up only 2 pounds year to date, yet that's another 0.9%. You combine those together, pork production up 2.9% year to date here in the U.S.
Knowing our production, at least on the pork side, it is not going to slow. It doesn't look like any time in the near future. Do we really take a close look on this shift in what the global pork supply and demand picture looks like, knowing what's been going on with Germany and Asian countries blocking imports because we don't know how long that's going to last for U.S. pork?
Yeah, so I will keep saying domestic supplies do nothing but push down on the outlook for prices in my mind. And I don't mean to say that in too much of a negative context, but we're going to continue to see growing supplies. And if you didn't have stronger demand, I think that gives us lower prices. So there's downside risk, yet all of a sudden we have this demand expectation that we likely will get some export markets as Germany's shut out of some of those markets because of ASF issues there. We don't know how that plays out at the end of the day yet. That the more it spreads in Germany, the more likely that's a long-term trade effect. If it blows over and they only end up with ASF and some wild boars and they somehow don't see that spread into the domestic industry, then maybe some of the price strength we've been seeing won't materialize as we get closer to some of those months.
All right, let's talk hogs and pigs as we take a look at the report that came out yesterday. Before we get into the surprises and the nuggets that we need to pull out of there, let's recap overall what we saw in the USDA's quarterly hogs and pigs report.
Yeah, if you start at the breeding side, so came in at 98.5% on breeding inventory. That was slightly at the high end of the estimate. Pig crop June through August at 96.6, also a little high. But I think when you look at the by weight hog inventories, the ones that stick out, so the 120 to 179 came in at 106.1. Greater than 180 came in at 109.8. Tells us we've got a lot of hogs that we're still dealing with if you buy those numbers from USDA.
I think if you buy those numbers is kind of the takeaway from a lot of folks as they take a look at this report. How concerning is it as we see the number of heavyweight hogs continue?
Yeah, so if you buy those numbers, it tells me we still have a lot of market-ready hogs in some places in the U.S. Ready to go to market, and we're only slowly working through some of the backlog. And in fact, it tells me that USDA is telling us that many of us on the export front would be underestimating what that backlog still looks like. Our ability to stop or slow hog growth, I think under the scenario that you see with these kind of numbers, you'd have to have stopped the growth. It tells me we've got a lot of finishing facilities that are pretty full at this point. Again, if you believe the numbers that we have out of USDA. And when you realize the average pre-report estimate, we'll take the greater than 180, was a 102.6, and we came in at 109.8. Tells you a long ways away from the average guess pre-report.
So my other question is, does it put question into the amount of hogs in that possibly were euthanized as well? Because we don't have a grasp of that number really in a big picture?
So potentially, I think you're right, Megan, and it's always been the big question, right? So how many hogs do we really euthanize at the end of the day? And we know we euthanized hogs, no question about it. I just, again, maybe we didn't do as many as we would have thought, and when you look, we only anecdotally know the data that's available. It's hard to get a good estimate. I always remind us all the time that euthanizing hogs comes at a cost. There's a physical cost of getting rid of hogs, let alone the mental cost of doing that as well. And I think both those things make it extremely difficult for producers to pull the trigger to euthanize hogs. And they don't do it until there's absolutely no alternative for them.
One last question as it relates to hogs and pigs. No revisions from USDA in this report. Surprised to see that statement, or does it just leave it open that revisions could come down the line?
So I was surprised to see no revisions. And I say that because what a phenomenal time we've come through. And for USDA to say, hey, we've gotten all the reports correct up until that. And then again, I don't want to speak poorly of USDA when I say that, but I wouldn't have wanted to be in their shoes trying to put together a hogs and pigs report in the middle of COVID-19, in the middle of what was hogs backed up, et cetera. That's a difficult job. I sometimes will quietly ponder to myself, is this a chance to wait until they know more about what slaughter looks like in the latter part of 2020 and in the early 2021 before making further revisions? I just remind us until USDA finally locks those down and we get final estimates, we're frankly years away from that happening. So we could see a lot of change. Again, surprised, yes. I'm just going to take kind of a wait and see attitude to see if we get some other revisions. I will say, if you kind of look at what I've done back of the envelope to say what happened to hogs that disappeared, and I say that from June, and you might say disappeared equals euthanized, and I'm not really ready to say that, but when you look at hog slaughter and inventory by weight group, we can kind of look at a residual number that blossomed a lot in the previous report, which would have suggested several hogs were euthanized. That residual numbers come back to much more normal standards when you look at what we got out of the last report, which might mean that, we maybe euthanized some hogs in that last report and it was properly in that kind of residual that I calculate, but now we're back to more normal, if you will.
All right, final report for us to talk about this week. Cattle on Feed came out this afternoon. Really, everything was within pre-report estimates, but on the upper end of it.
Yeah, so I kind of got to maybe it's lean this way to kind of get to the upper end of the report, which is kind of what we got today. So actual on feed September 1 came in at 103.8. That again, so that's not that far away from the midpoint of 103.4, but more on feed than we anticipated. Placed in August probably surprised us more than anything, coming in at 109.2. The range, upper end range was 110, so not outside the upper end, but getting close. When you look at the report, a couple things in my mind. You look at the 900 plus categories, really unchanged relative to a year ago. The heaviest category down 10,000 head. Tells me maybe we're a little more current in terms of what's coming here in terms of slaughter between now and the end of the year. But that 8 to 899 category up 82,000 head, I think that's the one that might spill into early 2021 with more cattle than maybe we were anticipating early on.
And maybe putting a little bit more pressure on prices as we get into the start of 2021.
Let's hope for strong demand to offset what's going to be some maybe more beef than we might have anticipated.
Everybody buy steaks and hamburger and everything any kind of meat you need, pork, beef, put it in your freezer.
Grilling season lasts until January, right? That's
grilling season there. Doesn't ever end in this house.
Yeah. Amen.
We're grilling all year long. I think my husband would be a very sad camper if he could not be grilling in the wintertime.
Yeah, that's a good thing.
All right, Scott, that's it for us this week. As we look ahead to next week's reports, what are we watching?
Well, it'll be a lot quieter for us than what we had to go through this week, but we'll get our restaurant performance index midweek and finish the week with a jobs report.
And I won't see you. I will see you next Friday, but I'll see you before then. We're launching our quarterly market outlook webinar series, and you and I will be joined by rotating economists every quarter. This month or this quarter, we'll have David Widmar with Ag Economic Insights. and John Anderson with University of Arkansas. So we will see you on Wednesday morning.
It'll be great. I look forward to it, Megan.
It will be. And if you haven't registered, go to our website, brownfieldagnews.com. There's a link that'll take you right to the Zoom registration page, and we will see you, and you'll have a chance to ask questions and interact with our economist as well. And to have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments as well. And to check out all of those great Brownfield podcasts, visit brownfieldagnews.com/podcast. Have a great weekend. Scott, you have a great weekend as well.
You do the same, Megan.
We'll see you next time. I'm Megan Grebner for Brownfield.